Is there really a new unfair mortgage tax on those with higher credit? Let's discuss. Seemingly overnight, the internet is awash with news of a new unfair tax on mortgage borrowers with higher credit scores. Some have even gone as far as suggesting that one could intentionally lower their credit score in order to get a better deal. Before you stop paying your bills in the hopes of cashing in to get a better deal, let's separate fact from fiction. First and most importantly, you will absolutely not get a better deal on a mortgage rate if your credit score is lower, even if your nephew just texted you a headline stating that a 620 FICO score gets a 1.75 fee discount, while a 740 FICO score gets a 1% fee. So why did your nephew make such a claim? This all has to do with changes to the loan level price adjustments, or LLPAs, imposed by Fannie Mae and Freddie Mac, the two agencies, the two entities that guarantee the vast majority of new mortgages. LLPAs are based on loan features such as your credit score or your loan-to-value ratios, among other things. They've been changed several times throughout the years, and a substantial change was just announced in January of this year. Wait, this news was announced in January? So why is everybody talking about it right now? Yes, in fact, we already told you about it, but people are confused because they don't understand delivery dates when it comes to Fannie and Freddie. Changes that affect the fees or guidelines are almost always implemented based on the date the loan in question is delivered to Fannie or Freddie. Delivery in this context typically occurs a matter of weeks after the loan is closed, although it can be more than a month. Now consider a closed loan has been quoted and locked for more than 3 weeks. Let's just say a month, just to be safe. Since these changes go into effect on loans delivered on or after May 1st, 2023, lenders began implementing them weeks ago. Many lenders implemented them months ago, especially on loans that have been locked for longer periods of time. So low credit borrowers are already getting a discount while high credit borrowers pay more? Not exactly. And this is where the confusion comes in. Also, from here on out, know that there is no opinion being given here, whether this is good, bad, etc. The whole goal is to clear up the confusion and offer the facts. So what you're saying, Osmond, is that a low credit borrower isn't paying less than a high credit borrower? The gap between what they pay is just smaller than it was? Yes. Again, all value judgment and political commentary aside, the change amounts to a tweak in an existing fee structure in favor of those with lower credit scores and at the expense of those with higher credit scores. But there is no scenario where a person with a lower credit score is going to get a lower rate. In other words, don't go skipping those credit card payments in hopes of getting a lower rate. How about some color-coded charts and tables? I thought you'd never ask. Let's start with the changes that have everyone so upset. The following table shows the differences in LLPAs before and after the changes. Red equals rising costs, green equals falling costs. If you only saw this chart, you could be forgiven for thinking someone with a 640 credit score was paying less than someone with a 740, but again, these are just the changes. Now, let's look at a table with outright LLPAs with the same metrics of credit scores and loan-to-value ratios. This is the new structure after the implementation of the change. As you can now plainly see, if you have a score of 640, you'll be paying significantly more than if you had a 740. Using an 80% loan-to-value ratio as an example, your LLPA at 640 is 2.25% versus 0.875% for a 740 credit score. That's a difference of 1.375%, or just over $4,000 on a $300,000 mortgage. This is almost half of the previous difference, and that's certainly a big change. Yes, it's a big change. So why is the government doing this to people with higher credit? Fannie and Freddie technically have a mission to promote affordable home ownership, and if you'd like a copy of their most recent statement on this topic from their regulator, FHFA, I'm happy to send that to you. Any other misconstrued news I need to know about? Yes, actually. While not as viral as the LLPA stuff, there's been a fair amount of press all about this new 40-year FHA mortgage. Listen, there is no new 40-year FHA loan. Lenders who collect payment on FHA loans have a new option to offer loan modifications with 40-year terms to borrowers who are currently having a difficult time paying their current FHA loans. I hope this information has been useful to you and that it's opened your eyes as to what the government is trying to do and to figure out which loan product you want. If you have any questions, hit up your favorite loan officer, Nathan Osmond, right here with OsmondHomeLoans.com. Saving the world, one mortgage at a time.